Time for today's three-stock lunch, and as we enter the final trading week of the year, we want to look at some of the outperformers of 2023 that could have more room to run in 2024. In order to get the names, we use the CNBC Pro stock screening tool and use the following criteria. These stocks are in the S&P 500. They're also up 25% or more, which means beating the index overall this year. At least half of the analysts that cover it rated a buy rating, and consensus price targets offering upside of at least 15% or more. It gave us just a handful of picks, but let's get a trader's take on some of these names. We can't feature all of them. So joining us for more is Victoria Green, Chief Investment Officer at G Squared Private Wealth. Victoria, the first stock on our list is Amazon. It's already up over 80% this year, and yet the Wall Street consensus is there's way more room to run.
Absolutely. Tons of room to run. You got to go like Dixie Chicks, wide open spaces, room to run. This stock, it looks great to me because one, AWS should continue to accelerate. So we're looking at better margins on that. That's about a 40% margin business. Number two is the growth of their advertising business. That's a little sneaky, but I think over the next decade, you could see advertising really come into play as a huge benefit to them on revenues. And then they have their other things they're playing in. Third-party sellers are doing great. Core retail is wonderful. Their logistics business helps them manage costs so effectively. They handle about 80% of their own inventory now. I look at this stock. I see a lot to love, a lot of upside, a lot of consolidation in some of their operations this year. That, to me, I see AWS as a huge driver for them and still a buy.
The next one might be more surprising to people, Victoria, because MGM pops up on this list. It's actually up 32% year to date. Would you stick with it?
Absolutely. MGM to me is a buy. They're coming off a horrible year. They had the cybersecurity hack that was about an $80 to $100 million drag. They had two unions that almost struck, and they had to do negotiations and get those labor contracts renewed. But for me, the stock is now on the upswing. If we avoid the recession, you're seeing great travel, great room booking. I think they were 95% occupancy in October, and they're well positioned on the sports betting and iGaming market, and that's a huge potential market. You have two states still on the sideline for gambling, huge states like California and Texas that may come in over the next 5 to 10 years, but it's also about what they're doing to generate more revenue. They switched their blackjack tables from 3 to 2 to 6 to 5. That's a 1.5 payout to a 1.2 payout. All these little things they're doing, generating more revenue.
All right, Victoria, the final name is also in discretionary. It's travel, and it's Delta, the largest airline by revenue and also market cap. That stock is already up 24% this year. Victoria, do you still agree it's a top pick for 2024?
I don't. I'm sorry. I can't get behind airlines. I'm kind of like Warren Buffett on that. Shoot it down at Kitty Hawk. But it's just, look, I don't see them trading back to 51 or 48. They've had a nice run up here. Take your profits. They have rising labor costs with that new labor contract. Fuel costs, always a headwind. Some of this travel is starting to ebb back. So they have had this expanding margin because of their pricing power. And now they're seeing that erode as travelers are a little bit picky, and they rely on their premium travelers. They relied on the uptick in travel they saw internationally. They got a huge boost from that. I see those returning to trends, and just really hard for them to continue this growth rate in 24. So I'm taking my profit and run.